have been on a bit of a wild ride so far this year and this month. This month alone, we've had a number of positives for the market, including strong second quarter GDP growth and a robust July jobs report, along with improving corporate earnings. But on the other hand, there's always an other hand. You can make a bear case here as well. Geopolitical headlines, worries over interest rate hikes, and concerns over a slowing global economy, including troubling new numbers on Japan's economy. They just came out. So is this battle of bull versus bear sort of a tip the market scale? Are we at that point? And more importantly, how will this impact your money? Well, if he can help it, he'll help you. Peter Schiff is Euro Pacific Capital CEO and Chief Global Strategist in a Fox Business exclusive. Good to see you.
Oh, nice to see you.
Well, you see a correction, but not as bad a correction as some other people see it. Why?
Well, you've got a Janet Yellen put beneath the market. Just remember, she is basing this whole recovery fantasy on the foundation of asset bubbles and the wealth effect. And if we start to see a more pronounced decline in the stock market, the Fed needs to do something about it. But, you know, I want to challenge your supposed bullish assessment of the numbers, because we didn't really get a strong jobs report, because all the jobs we created were part-time jobs. We net destroyed full-time jobs, and we replaced them with lower-paying part-time jobs. And the GDP numbers that we got for the fourth quarter, they're going to get downwardly revised significantly, I believe. And what's left is mainly the holdover, the GDP growth, the economic activity that we didn't have in the first quarter that was pushed into the second quarter by the weather. So if you take a look at the whole first half of the U.S. economy, it barely grew, if it grew at all, and I think the second half could be even worse.
Okay, so you discount the 4% growth domestic product number, but what about the JOLT survey? That came out yesterday, and we made a big deal of it because it looked like the best number that we've seen in many, many years. When it comes to job openings, there are a whole bunch of them. The hires, there is a gap there, but as you spin it forward on where the economy is going, it's just not strong anywhere, Peter.
And especially if you've got the Fed threatening to remove the only props that the economy has, and unfortunately they're false. I don't understand how people can believe that the Fed could actually follow through with the threat to NQE and then raise interest rates without simultaneously bringing about a deep recession and bear markets in stocks and real estate.
But you don't have $2 billion in assets under management. That's what he has, by just sitting there being paralyzed by what you perceive as a bad economy. You've put your money to work in the right places. What do you like right now?
Well, I'm still relatively small in the scheme of things and the money that we manage. So, but hopefully that will change over time as, you know, my message begins to resonate
what'd you start
with more
with
people.
Years ago when you were out in California?
Well, it was a lot less than that.
Of course. So you've grown. You've done things right. What are you doing now? What's your list?
Well, my strategy has been the same for quite some time, because I understand the problems that underlie the U.S. economy, how the Federal Reserve is exacerbating them in the name of trying to solve them. And so I want to invest abroad. We still favor equities, but I look at international equities, I look at value, I look at good dividends, and I want to own companies that are not dependent on the U.S. consumer.
Here on this, look on this map,
products.
Everybody. He likes Australia, Singapore, Denmark. What's in Sweden? What do you like in Sweden?
Well, you know, what I like about those countries is they experienced a lot of socialism, and they don't like it anymore. And so now the pendulum is swinging in the other direction. They're going from more government to less government, you know, from more government control to more freedom, and they're lowering taxes, reducing regulations.
Are there stocks over there in Sweden?
Of course there are. It's a whole country. They got a strengthening currency. They got a good stock market. There's value there. There's resources there. And again, it's not only Sweden, it's Norway, but we invest in New Zealand, in Australia, in Southeast Asia, parts of Latin America.
Let's put up the miners, and because you feel that the miners now have an opportunity to really rise. Silver below $20 an ounce these days. That seems to me like a good buy because it's so cheap.
Well, it did get as high as 50 a couple of years ago, but it started the rally from below 4. So we're in a big bull market. We've been pausing for the last couple of years, but I think it's the pause that's going to refresh. I think what drove the metals market lower in 2013 was the false belief in a U.S. recovery, and the idea that the Fed was through with QE and that we were on the verge of a tightening cycle. None of that is true. We are slipping back into recession. Janet Yellen is going to launch an even bigger round of QE than what Bernanke launched, and this is going to be very bullish for gold and silver, but it's not going to be bullish for the U.S. economy.
That's an interesting prediction that you think there will be more QE. Peter, thank you very much for joining us.
Anytime, Liz.
This tiger never changes his stripes. This bear never changes his fur. Good to see you, Peter. Thanks.
I'm not bearish on everything.
No, you're not.
Just plenty of things we're buying.